Let's address more earnings. SL Jain, MD and CEO at Indian Bank on the show right now. Mr. Jain, hi morning. Before we come to profitability, your ROA has hit 0.8% in the quarter gone by. Do you believe 1% ROA is possible for the fiscal?
The way our ROA is growing on a quarter-on-quarter basis, our endeavor will be to touch this 1% numbers. Whether our business is growing, the way the NII growing, the way the NPA has come down, so we'll achieve these numbers.
Right. You've also reported a net profit of 1,448 crore rupees. Which are the top contributors to the bottom line this time?
Contributor for our profitability is our NII income, net interest income, which is growing at a 29% or so. In addition to that, our non-interest income. Non-interest income is basically recovery in write-off, increase in our fee-based income. So NII plus other income, both are the contributing factors for our good performance.
Mr. Jain, hi, morning. What about the business momentum on ground according to you? How's that shaping up? Do you think that the advances growth will slow down in the next fiscal because the current pace is at about 14%? Is that a concern?
Well, see, our growth is a 14%. And you see the beauty of our growth is in all segment it is growing. The RAM segment which is growing 12%, but the RAM retail is growing 13%. Agri is growing 16%. MSME 7%, but if you factor this ECL, GS, where the repayment has come, it is more than, it is in 2 digits again. In the corporate side also, though it is appearing 12%, but our standard corporate has grown by 17%. Our mid corporate has grown 19%. So basically all the segments are growing, and we expect that the same growth momentum should continue for this year as well, because the GDP growth is expected 6.5%, and if you consider the inflation part also 5%, so it is 11.9 or a 12%. So we should be able to grow at this rate for going forward as well, and therefore we are hopeful that at least we should be able to grow 10 to 12%. Last year also we have given a guidance of 12%, and we have ended with a 14%.
So what's the guidance when it comes to deposit growth? Currently your credit is growing in double digit compared to deposits. Do you think that you will be able to bridge that gap between credit and deposit growth?
No, see, the deposit growth we have grown by 5%, but the saving deposit has grown by 7%, right? And as far as our existing liquidity is concerned, we are at 158% of the LCR. We are having around 35,000 crore of excess SLR. So this is our liquidity number. So that is why we have not grown more on a deposit side in the March, because one more reason that the interest rate was high in the month of March. Now the interest rate too has softened. So as a strategically also we have not grown higher in March. But going forward, we would like to grow more in deposits, and for that we have created number of things in the bank. Organization level also, we have created government sale at various locations. We have come out with various products. We are opening accounts through tabs. Last year also we opened around 37 lakhs accounts through the tab. So our endeavor is to garner granular part of the deposit, so that we will be able to maintain a good control on our cost of deposit.
Right. But there are fresh slippages of about 2,500 crore rupees in the rural, agri and MSME sectors. Do you believe situation can deteriorate further?
Point is that there are 2 reasons. Out of this 2,566 crore of a slippage, half of the slippage comes from the MSME book. Again, there is half come from the restructured book. What happens is when the corona came, we have restructured the portfolios based on the RBI guidelines. We have given ECL, GS also. So I am telling you, out of the 18,000 crore of a book, around 5 or 6% of the book has slipped in the MSME. So this slippage is because of this reason. And but you see the collection efficiency of bank, it is at a 95%. If you see the SMA2 of the bank, it is even 0.52%. So considering my collection efficiencies, considering my SMA2 book, And also considering this that 92% of our book is behaving good. Even the ECL GS book also we have given 11,800 crore and around a 600 crore is a NPA. So it means 92%, 93% are behaving good. So I hope that going forward, slippage should come down from the MSME book as well.
Right. Also, your domestic NIMs have remained at 3.5%. How is it that you'll be able to maintain your margins in this high interest rate scenario?
You raise the right point, but happens the deposit cost will also increase. But you see, we are at 3.59%, right? So if you see the margin of a bank for the 22 and the 23, 22 it was around a 2.91 and then the 23 is a 3.41. That is a yearly numbers. And currently I am sitting at 3.59. So I hope that I should be able to protect my existing market margin of 3.4%. Of course, with the 10-15 bits here and there can happen.
Right. Great to have you on the show, and thank you so much for speaking with us today on ET Now. We'll take a very quick break on that note. Let's just quickly check in.